following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
Yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Oh, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. It's a TGIF, folks. Let's make it a great one. I start with the idea that nothing is impossible and everything can be done in the end. Albert Ferretti. Market-wise, let's take a look at it out here. We have the Dow Industrials down 181, NASDAQ off 64, S&P's down 19, gold contract up flat, 1,081.50 an ounce. Silver, $14.19 an ounce. Platinum, down $18 at $8.59 an ounce. Copper, flat at $2.16 a pound. Light sweet crude, down $1 at $40.74 a barrel. Bonds, we have the 10-year up 10 ticks, 126.17. 30-year up 17 at 153.12. King dollar up 368 ticks, traded at 99.08. The euro is down 72 at $1.07, and the yen is trading 122.27. Our phone number is 877-927-6648. Give us a call, folks. Find out what's going on in your world. In the world of the S&Ps, let's take a look at them. So if we start with the SPY, folks, this is what you have. We're down $2. You're trading at 202.83. We have an expansion of volume as we're coming into lower price. Now, because it's a Friday, which is a beautiful thing, we can do the weeklies on this. When you take a look at the weeklies, bottom line, I'll let you make the decision, but it's, and here we go. So, when you take a look at where we are right now versus where we've been, the high in the S&P, the SPY, is 213.78. That high was generated May. We went sideways for about another 2 months. We came downtown, and we came downtown hard the week of August 20th. The SPY goes from 210. Following week, you're down to 184, 182.40. You do a nice counter-trend bounce. Now, the counter-trend bounce, fast, furious. We go from the 186 level, 5 weeks in a row, right up, until last week, you get to 211.66. Okay, so what were we doing there? Well, you were coming up and you were testing the 3 black crows, folks. And 3 black crows, what 3 black crows specifically are, is that it's a candlestick charting pattern. It's hard to basically do the pattern number 1, because what happens is this. You have to have a large uptrend first. Then you have to come down fast, furious, 3 days in a row, approximately around the same amount of space also. It's time and space. Well, it's, let's see, it wouldn't be time. Yeah, it's time, it's price, it's all of the above, and I add volume on it. Bottom line, that's what we did. They love to get tested. The amazing part about a 3 black crow, it's so hard to test them that you hardly, they don't show up in the marketplace a lot. Probably the last 7 years, 10 years, you might have seen 2 or 3 of them, that's it. Bottom line, that's what I think we have. Now, what do we do? So let's go in the aspect of how we tested this area. Last week, when we came up, we tested the whole area on the weekly, which is so sweet that we can do the weeklies now. We tested the weekly. We had 466 million shares. That was testing 865 million. So 466 versus 865. You can see that correlation alone, not enough buyers, right? Buyers versus sellers. Now, this is the one you want to wrap your head around, too. Now, we come off that high. As we're coming off that high, This week we went from 209 to 202.51. Well, we've already done 500,000 shares. That 500,000 shares, of course, is more than $466 million on the way up. And what does that set up? This sets up now, you're going to run down to the bottom of the consolidation that we're in. That bottom is 186.93. We'll see next week whether we're going to have another expansion in volume, as we're going to lower price. That's your SPY. We go into the Qs, the 3 Qs. So 3 Qs, a little bit different setup. 3 Qs, the high that the 3 Qs were going into was the July high. July 20th, that high there was 114.39. What do? You get to 115.57. Now, does it hold? No, it doesn't hold, number one. You come off that high, and as you come off that high, guess what? Volume expands. Now, watch how we tested this high. When we tested the high last week, we had 126 million shares traded. We got to 115.47. The high that we were going into was 154 million. So we were shot by 25 million just going into the high. Same deal, supply versus demand. Now, here's the kicker. Because inside the out of time in the trade, you're always looking for confirmations on both sides, folks. Going up and going down, that's what a robust system will do. So what ends up happening? This week, you're coming down with 159 million shares versus that high of 126. So what does that set up? That sets up, now we're going to make a run down to the 98.75 level inside the Qs. Okay, now let's go to the next step. The next step is kind of neat. They're all neat, but this one here is pretty intense. So if we take a look at we go back to the SPY for a second, what you're going to see is that you're going to see, number one, I'm going to bring this back 5 years. And what we've done is that we broke the 200-day moving average, and we broke it a couple times in 5 years. Each time that we broke it, the market never looked back afterwards. The first time we broke it was in August 2011. It got back on the top side of it in December. Never looked back. Touched it slightly in June. Touched it of June of 2012. You touched it again in November of 2012. Then you didn't even get close to the 200-day from November of 2012 to October of 2014. 2 years. 2 years, just the market went one way. Well, it's been going one way for 6 years. Bottom line, it gets under it again, gets over it, doesn't touch it again. Until when? August of this year, takes it out with a vengeance. Wide price spread, accelerated volume. Guess what? Get a huge bounce, comes back on the right side of it. This is the first time, folks, since the downdraft of 2007 that this has taken it out twice. And bottom line, you're taking it out with a vengeance once again. What does that set up? That sets up much lower prices coming at us. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to come right back. Dow Industrials down 167. NASDAQ off 60. S&P's off 17.5. Gold 1081. We're going to talk about the bond market when we come back, because the bonds are once again saying, guess what? Fed might be going up on short-term rates. That bonds want to go up also. That means rates are going lower once again. We're going to be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow's off 185. You get the Nasdaq off 66. S&Ps are down 21. And, you know, when you look at the markets, folks, you know, you can make the case that, hey, listen, we're still near the highs. No doubt you can make that case. Bottom line, I'm going to make the case, as I've done the past few weeks, is that when you have equities, folks, large equities, that are gapping down 10 to 15%, and they drop out of bed, that is a market that is not only going lower, it's going a lot lower. You think about it for a second. You're talking about major stocks that you go to bed at night, you wake up in the morning, and you're down 15, 20, 25%, okay? It's out there every day. This morning, what do you have? Fossil Group, which was already down. That's by the way, Fossil Group, it's $4 billion. That's how much they take in. Guess what? That is down another 34% today, another $17. Ultra Salon, it's down 8%, $13.87. You have Nordstrom, down 16.5%, $10.50. LinkedIn's down 3%. Credit Corp is down another 4.5%. That's been off every day. Dillard's is down 8.5%. GameStop is down 15.5%. Restoration Hardware is down 6.5%. Big numbers, folks. You don't have that type of action in a market that is just in a correction. This is underlying this market right now, and I suspect unfortunately, what folks are going to see is that when they're getting their statements just from the end of October, because they're probably just getting them right now, they're going to basically be questioning their financial advisors like, hold it. At the end of October, you know, this market, the S&Ps were at 2,094. And that would, at 2,094 in the market, that would be basically a flat market for the whole year. Well, guess what? I suspect 90% of the folks that are in this market right now, they're not going to be flat. Why? Because what has happened is that there's very few stocks, and a handful I'm talking, that have held the market up because of weighting structure. Those are starting to fall apart now. Now, I'll show you one sector that hasn't fallen apart. I suspect it will. I'm short this sector, just so you know, okay? Bottom line, we caught it the first time, and it was a monster move on the way down. And we'll see what happens the second time. And it's the IBB. The IBB, you know, when I say, you know, it isn't down, it's, you know, it's off 400 and it's 323 right now. But the bottom line is that when this goes south, man, this goes south so quick. Last time it went from 360 down to 285 in basically 6 days. Now, today, the IBB is up $3.56. So what is that all about? Well, guess what, folks, okay? That only is about a equity that has a decent weighting structure inside the IBB. It's Illumina. It's up $10.63 because it's getting put in the S&P 500. And technically, what happens is that the SPY has to buy it, number one, and all the mutual funds that mimic the S&P have to buy it. You know, this is an equity that has already come down from a price point of $240, $242 down to $166. It's a dead cat in an extraordinary way. Bottom line, I suspect what you'll end up seeing the IBB fall apart also. Now, let's go over to the bonds, because the bonds, folks, this is going to be the deal like, okay, how is this bond market going to react with our markets going south in a big way? So check it out. If we look at the 10-year first, this is what you have. The 10-year bond out here came off its high. The high that we're talking about, the high that was generated out here was on the October 2nd. The 10-year bond at that particular point was trading at 130. We're at 126. Now, that's not a huge retracement inside the context of retracement. What you did have, though, no doubt, man, you went straight one way down. Now, we broke the swing point of 126.16. And when we broke it, you had some volume on the break. Now what we've done is this. You're back inside it again, and it's going to be basically next week that we'll get more information saying, is this bond move just a counter-trend bounce now on the way up? Or, in fact, is there enough strength in bonds that this was a retracement, that's all it was? When you look at the 10-year bond, I would say that the market hasn't given us enough information yet about, you know, a bond's going to go to a higher price. The 30-year, however, is giving us information. The 30-year, bottom line, is not only inside the larger range, the 30-year had a hard time basically getting outside of the range. The range we're talking about is 150, 125. We came down to 150, 112, but guess what? We never closed below the swing point. Then what ends up happening yesterday? Yesterday you get some volume in the market, 272,000. Today's not bad. You know, we'll see how it hits the 155.21. That would give us a better indication that, hey, listen, these things want to go higher. If we take a look at the correlation, the long-term correlation, meaning we put continuous contracts together, this is what you have when you put a continuous contract together. All the market has done is that, number one, it didn't come down to the swing point of 147. You're at 153. This is a long-term chart. But you know what? That's just saying, hey, you're going to go back up to the tops again. The yield rate on these right now is still yielding 2.2, 2.28 to be exact on the 10-year. That, folks, that number is still wicked expensive in the context of the rest of the world. It's a huge number. The way the market is trading right now, the way this is set up, if we go take a look at the volumes inside the SPY, inside the Qs, they're all expanding in volume. You're coming into, you don't have, there's no window dressing going on next week. The following week, you do have Thanksgiving, and the day after Thanksgiving normally is a decent day. The SPY right now is at 202.57. This thing's in trouble, man. This thing is going to go fast. It's going to go furious. And I expect what you're going to see probably Sunday night is you're going to see expansion downtown. And why? Because if we go over to Asia and we take a look at Asia, what you had last night in Asia right across the board is that you had lower prices. The counter trend bounce in Asia looks like it's over. Hang Seng was down 492. You know, and you're talking about a bounce that didn't go much. I mean, the Hang Seng bounced from 20,360 in the end of the beginning of October. It gets up to 23,400 and has already given up 1,000 points in 2 weeks. And that's going to go right after the lows once again. You start putting that stuff together. Now let's go over to King Dollar. We take a look at King Dollar. What do we have with King Dollar? King Dollar right now looks like it finished its ABC structure on the way up. What King Dollar had done, King Dollar had got to a price point of 99.60. The A to B equals C to D was 99.98. So it missed it by 28 hundredths of one. You come off this, now watch how this is what's pretty cool. When you finish an ABC structure on the way up or the way down, you know, most times it does something else anyway. The real key is going to be, is that the end of the move period, or is it just a retracement? Well, what happened is that we hit a high with 23,000 contracts. You come off the high with 44,000. You're doing bounce today with 33? That's telling me, guess what? You're going right back downtown. It's going to be pretty wild watching this whole thing shake out. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrial's down 196. NASDAQ is off 71. S&Ps are down 22. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow off 199, NASDAQ's off 70, S&Ps are off 21. Percentage-wise out here, you got the Dow off 1.1. S&P's off 0.9. The NASDAQ is the one that getting the juice behind it, which the NASDAQ started off slow. The NASDAQ right now is down 1.4. Now let's go over to our man, Mr. Steve Rhodes, as we do each and every Friday at a half past the first hour. Our man, Mr. Steve Rhodes, has a great show every trading day right here at TFNN, folks, 1 to 2 Eastern Standard Time. You can get that program. In fact, you can get all the programming at TFNN. We start live programming Monday, Wednesday, Friday. We have 9 hours of live program, Tuesday, Thursday, 10 hours, 8 o'clock in the morning to 6 o'clock at night. Get it right on your cell phone. TFNN.mobi gets the full audio. You want to get the video, Tiger TV, folks, just go to TFNN.com. On the right-hand side, you're going to see Watch Tiger TV. You hit that button, comes right up. It's a beautiful thing. And our servers will understand what type of device you're on. You will get that Tiger TV delivered to your device. Now, Steve also got a great newsletter. It's Mastering Probability. You can come over to our website right now, test it for 30 days, absolutely free. The way you do it, go to TFNN. At the very top, you're going to see newsletters. Hit newsletters, hit trading newsletters. See Master Probability right there. Steve Rhodes, what's going on?
Hi, I'm doing great. Good to be with you, Tom. And, just when you get Tiger TV anywhere, it's like a little bit of magic. And you know what? It was amazing, folks. Okay, and of course, we're prejudiced to Tiger TV, but it's amazing to me, even the technology of how clear it is, man. I mean, it's so clear. For some reason, I watch it on a computer at work, but I'm watching it on my cell phone all the time. Exactly. It's great.
And it's clear on the cell phone. I mean, it's just wild, and I don't know if it's just smaller, and it just is. It's just wild.
It's because you made great investments, to be able to bring this technology and all these tools and everything to all of our listeners out there. We've got, listeners around the world. I get emails from folks all the time. The last one was from somebody over in Scotland, that listens in on the show.
Braveheart. That's a beautiful thing. I like it.
Yeah, it's cool. But what I thought we would do today, just during this segment here, is talk about some great magicians. And I love magicians. A lot of times people think of Houdini and David Copperfield. It's really all about smoke and mirrors. But I don't think that we can leave out the Federal Reserve. Now, I got a picture of the FOMC, their typical meeting. Take a look at this table. This is their conference table. I mean, I think they actually have an ice skating rink in the center of it.
Okay.
Where you can skate back and forth. But what I want to really talk about here is, so much hype, so much conversation about the Fed's fund rate. Are they going to raise it? Are they not going to raise it? Is it going to impact the markets? You get people that are on the tube, talking about because, the December rate may come in or is supposed to come in, that's impacting the markets. And if we just simply take a look at this chart here, goes back to 1987. So 87 in essence through today. And the brown line represents the Fed fund rate.
I see it. Okay, cool.
The blue line is the Dow going back. And what we can clearly see, now this is a monthly chart that we're looking at, so I'm just giving people the overall scenario. Rates rising, if you go back and take a look at the scenarios when we've had them in the past, our markets have moved up with them. Doesn't mean you don't have a hiccup for a day or two or whatever the time period might be, but overall, in the past, we haven't seen where raising rates has just simply toppled the market. And when we take a look at magic tricks, the Fed talks about a dual mandate out here. Well, actually, this chart here shows the 10-year yield, the 5-year yield, and the S&P 500. So, the same scenario plays out here. But the so-called dual mandate, the thing that's really the issue that has an impact, and they don't really tell us about this, but this chart here shows the non-farm job openings. It's really not discussed much. But when we take a look at that and correlate that to the stock market, the Dow in this case here, the blue line are non-farm job openings. And this chart goes back to 2001. That's as far back as the data by the Bureau of Labor Statistics group out there.
Okay.
But what we have seen, if you go back to the 2000 top, when non-farm job openings start decreasing, our market starts moving lower. Same thing back at the 2007 top. And that's really now the data is a little bit delayed. So what's in my chart here is just really simply through the September data, which ticked up slightly. It didn't take out the high from a couple months prior to that. But in my opinion, this is what really needs to be watched by longer term investors, is when those non-farm job openings start decreasing, that's going to set in place a fairly major market top out there. And I don't know if we have that or not at this moment. And I don't know if you've ever done this, but sometimes when I'm doing technical analysis and charting, I run into a scotoma. Scotoma is where, so if anybody's ever asked you to go to the cupboard and get the salt, and you look in the cupboard and you're like, hey, the salt's not there.
Okay.
And they're like, yeah, it's right in front of you. No, it's not. And of course, they come over, they find the salt right in front of you. Sometimes we just don't see what is in front of us. In fact, like this picture right here, a lot of people are familiar with the picture of the beautiful girl and the older woman. I can see both in here, but most people only see one.
Sure.
And back when the market was, I heard you talking a little about the 200-day moving average. If we take a look at channel lines out here, from 1994 to 2001, that's the channel line that's on our chart or on our screen right now on Target TV. And when that breaks, that led to lower prices. The same thing in 2003 to 2007. And when the August lows, September lows came in, and this is the New York Stock Exchange that we're looking at, we saw that price channel get broken. And at that stage, I'm thinking, boy, this is really curtains for the markets. Now, right now, today, the New York Stock Exchange is back down. Again, it's a monthly chart, but it is testing the bottom of that price channel. But what I also realize is that we've got the bottom of the price channel and we've got the longer-term trend. Now, this goes back to 2009. And it was that longer-term trend line that actually held price in place. But when I take a look at the NDX 100, which has really been the strength inside the marketplace, it didn't come anywhere near its longer-term trend line. I kept looking at it, saying, what do I make out of this? And what I had forgotten to do was to put the simple price channels out there. And back in August and September, when price was moving down inside the NDX 100, all that it was really doing was testing the top of its price channel out there. And all one has to do when we use either horizontal or diagonal price channels is when one level gets broken, you just simply add to it the same distance between the two. And when we do that inside the NDX 100, we can understand why the market is having such conniptions and difficulty getting beyond the highs that we've seen thus far. And the reason is because it's up against that resistance of that diagonal trading range. And it's also up against this horizontal trading range. So this 4630-ish type area is really strong resistance. And that says at this stage of the game, if the market's going to pull back, continue to pull back, our next real piece of information doesn't come until probably around the 4250-ish type area. I'm just estimating where the
That's a long way down.
Where that channel line is at.
Yeah.
So, you're at around 4,500 or so, wherever it's at, right at this very moment. And that's a level that everybody needs to keep their eyes on. And if we take a look at the NDX 100, I'll give you the bullish case. The bullish case is if it gets over 4630, we probably go to 5135. But here's the key. Today, that gap down created this island top pattern out there. And island tops are the most bearish patterns out here. So this is the bearish case. Other famous island tops, you've got the inside. Well, what the NDX is actually doing. You mentioned the 200-day moving average, and today you've got a little kiss and tell. The 50-day simple moving average is basically touching and testing that 200-day line. If that deflects lower out here, that's bad for the markets. But I see that our time is up,
folks. Awesome, Steve. Number one, you can come over to our website at TFNN. You go to newsletters, go to trading newsletters, Mastering Probability. You can test drive it right now. Steve has this in his newsletters each and every day, folks. And, of course, remember, he's on 1 o'clock, 1 to 2 Eastern Standard Time. Thanks, brother. Have a great one. Have a safe one, man. Stay right there, folks. Come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow off 171, NASDAQ off 65, S&Ps are off 18. Let's go to Dave in Boston. Hey, Dave, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very well, thanks. And thanks for doing everything you do. It's a great show.
Thank you so much. We appreciate you listening, man.
Yeah, no problem. Hey, I'm thinking about accumulating a position in SPH, Suburban Propane Holdings, for a long-term hold. And my thought was to scale in 2 or 3 purchases. And the initial target that I had set was $30.
Okay.
We're pretty much there now, but I'm beginning to think that my initial target might be a little too high. Can you take a look at it and let me know what you think?
Absolutely. Let's take a look. It's Suburban Propane. The low's 30. That's today. The high's 46. The PE, let's see. Well, it's hard to tell. They're saying that the PE is only 2.6, but that maybe that's what it is. You know, with a company that the bottom line is it doesn't make a whole bunch of sense that they would be in a large PE because they're pumping gas, folks. Good company. I use them. I use them at home, and I use them on some of our rentals. It looks like this thing is coming down too hard. You know, I think you already know that, though. Coming into this $30 price point, and we look at this. So the next, 30. This is what it's testing today. So it's testing the lows of September 30th, the week of September 30th. So what that sets up, that sets up $20.40, man. So I wouldn't touch it yet.
That's what I was thinking. Probably wait to let it either settle down or go a lot lower, one or the other, right?
Yeah, it's pretty wild that it's setting up that. What I can't figure out is, so technically that's how it's set up. It looks like fundamentally they either sold something because their revenues have gone from $1.9 billion to $1.4.
Yeah, a lot of it is they just had their earnings call this week, and they attributed that to the warmer weather for a good portion of the year in most of their markets.
Wow.
And lower natural gas prices.
That's intense. Well, you know what's intriguing about that? The natural gas, the price itself, right, hasn't come down that much in the context from last year to this year. Meaning, well, depending where you are, I guess. In Florida, the propane hasn't, folks. Okay, we use propane to heat our pools. But, I guess if it's hot, that makes a huge difference. Yeah, there's no doubt about it. Because we're using it, so it makes a huge difference, I guess. That's pretty wild, man. Yeah, so listen, man, just hang tight. The way this market is trading anyway, it'll be a lot. This downdraft's, to me, it looks like it's just starting, so.
Yeah, it might take everything down with it, too.
Well, and what you have, folks, what has happened is this, okay? You had the downdraft, fast, furious. Plenty of people said, okay, that's the bottom, buy. People basically got sucked in again. They got taken to the cleaners. They're going to get taken to the cleaners again. And, as I said a little bit earlier, the aspect of how accounts are up across the board as of October 31st, people are going to be in shock because they're not going to be up. So that is going to get more selling going, and that's not even counting the amount of hedge funds that are down. So when you have hedge funds that have come down 15 or 20%, and large mutual funds that are down like that, what ends up happening is that there's going to be more selling on the ones that are actually winners. Because what will end up happening as they have losses that are generated, they're going to have to sell those winners to at least try to basically smooth something out and say they can say to their clients, okay, we're only down 10% or 15%. You know what I'm saying? I don't see them leaving their winners out there. So I think this is just the beginning of quite a bit of selling. Cooking, brother. Have a great one, man. Have a safe one. Now, if we come over and we just look at this market coming into the close, it's not, it is what it is, folks, okay? Meaning that, the Dow stocks, they've been coming down hard, fast, furious, all of the above. If we take a look at the Dow Industrials today, what you have is this, okay? The Dow, first off, never made it up to the highs that were generated out here in July. That was 18,137. You're already into where we broke topside on the 22nd of October. That was 17,180. We're at 17,250. That's going to slice and dice that more than likely, next week. What does that set up? That sets up a run down into this 16,663. It's a big number when we do go inside the Dow Industrials, and this is a heads up in itself. The stocks today that are a week inside the Dow is that you have Cisco down $1.60, Nike's off $3.97. Nike's a powerhouse though. Home Depot is down $3.63. That's been pretty good. United Technologies is off $2.68. When we actually look at the Dow stocks, one of the first ones that was give us the heads up, there's no two ways about this, was Walmart. When Walmart failed after a 12-year consolidation, that was a big heads up. And now what Walmart's doing, it just continues to lower price. We've hit, well, let's see if it's going to be an ABC down. This is going to be wild because it broke its B point. And 61 million. No. Okay, so Walmart this week has broken its lows. The lows were 57.16. Didn't break it with volume, but we're going to be at 56.30. That continues lower. And, of course, Big Blue, that's been going down forever, that has a long way to go down. And Big Blue, by the way, still is a large weighting structure inside the Dow Industrials. Big Blue has come down from 210 to 131, and that baby is on its way down to 116. Now, Apple has basically stayed up at highs. We're trading at 112. The high in Apple is 134. So that's not that bad, right? But guess what has happened, folks? Apple has been getting croaked, slow, steady on the way down. Apple right now looks like it's on its way down to $92. Apple itself, inside the S&P, inside the NDX 100, inside the Dow Industrials, is a huge weighting structure. Apple itself can drag these indices down. As the indices get traded down, what ends up happening? This is where the ETF structure comes in play. Is it the chicken or the egg? As the Apple was awesome for all the indices when Apple was going up. It's going to be a disaster when it's going down. The reason being is that as Apple goes down, guess what? They're going to sell the diamonds, they're going to sell the SPY, and they're going to sell the QQQ. What do you think happens when they sell the diamond, the SPY, the QQQ? As they have to sell them individually. Now watch this. This is what's it's great when equities are going up for ETF structures. It's the disaster when they're going down. Because what ends up happening, it is selling in all the equities inside the NDX 100, the Qs, inside the SPY, SPY, and inside the DIA. Okay? It's a phenomenon, folks, that you absolutely want to wrap your head around. I remember the first time that this happened in 1999, people got sideswiped in a huge way. They really didn't even understand what happened until about 2002, 2003. Unfortunately, many folks in the marketplace still don't understand what happens inside a weighting structure, inside the ETF structure when things go up or down. It's buying, buying, buying as you're going up. With the whole indice, it's selling, selling, selling when you're going down. You stay right there, folks. We'll come right back. Dow right now is down 187. Nasdaq's off 68. S&Ps are off 20. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And don't forget, folks, if you'd like to test drive either my daily newsletter, Market Insights, or the Gold Report, you can do that by coming over to our website at TFNN. You go to newsletters you go to trading newsletters, you hit Market Insights for the daily report. You can test drive that 2 weeks absolutely free. If you'd like to get the Gold Report, you go to newsletters, investments newsletters. You can do the Gold Report for 1 month. Bottom line is you can test drive both of them if that's what you like. Now, when we take a look at these markets, folks, okay, what you have is that you have plenty of equities that are down 20, 25% off their highs. Big numbers. And when we talk about how they come down, it's actually phenomenal. And what they've done is this. If you remember when we go back a few months, you know, for a long period of time as the market was at high, actually it was about 6 or 7 months coming across the highs, I was talking about how the market wanted to test the October 2014 low because we had a high volume swing low. Well, bottom line is that when we came down in August, folks, okay, we blew that low away. Now, what you can pick up out of that is this, is that we came all the way back. However, that being said, guess what? There's plenty of equities that didn't come all the way back that are way below that low. And what does that set up? What that sets up, folks, that sets up now that you're going after the 2011 numbers. You know, I'll bring up Fossil for you here just so you can see how this thing shakes out. It's pretty intense. You know, Fossil is off $139 to $32, you know, and we're talking about a company that takes in billions. But I want to show you when you have volume that comes off highs, number one, how you can do a retracement, but guess what? That stock is done. That equity, you talk about coming down with a vengeance, it came down with a vengeance in 2012. It went from 138 to 69. Has a high volume swing low. That high volume swing low was $69.57. Now, it's amazing, but bottom line, it went from $69. That's in May of 2012. By November of 2013, so it's a year and a half, right? It got all the way back up to 134.99. Now, dramatically lighter volume. It did 15.3 million. What ends up happening? You come off that high, and you come off with volume again. How we come off the second high was very subtle, but bottom line, watch how you come off it. You hit a high with 15 million, 15.3. The first month you come down with 19. Now, if you take the percentage, that's a big percentage move. It's 4 million on 15. The next month, you come down with 23. Big percentage on 15, right? Next month, 23. So you're talking almost 40% more volume. Well, that's the beginning of the downdraft. Now, what do you have? Where is it going after? Well, it was going after the last time we had any volume, but this is a heads up in the aspect of kind of where we can go. The highs of October 2008 in this equity is $28.40. Well, that's the last time we had any volume on the way up. It's thundering down there this month. This month, we've already done 40 million shares. That's where this baby's going. Now, this would be different if this was an equity that, you know, a small equity, okay? This equity, folks, you're talking about takes in $3.2 billion. This is a major equity inside the marketplace. It's no doubt in the fashion deal. And I think I particularly don't know myself is that people not dressing up anymore or buying clothes, you know, or is Amazon getting everything? It doesn't matter. You know what matters, folks, is that the market's going to lower price. Get your stops in. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Everything you need is right inside you. Grab it and have a blast, folks. Have a great weekend, safe weekend. Look forward to speaking right back here, 8 o'clock in the morning, Monday morning. Go get them, folks.